Good evening, and thank you so much for joining us on this edition of Spectrum, live on Radio 1 FM 90. We're broadcasting from the central building, which is the home of this radio station, but we're also live on our website, which is www.radio1fm90.com. You click on the icon with the word listen live. You can also find this radio station on the different radio listening apps. Those you can obtain from the app store of your smartphone. You download, look for Radio 1 FM 90, and as long as you have an internet connection, you'll be able to listen to us from anywhere across this globe. Please share with us your thoughts, comments, or questions via the WhatsApp line 0703 090 090. I have a team of people here in studio who will be responding to those particular issues. Today, we'll be understanding the tax issues, looking at what the government has proposed for the next financial year, 2026-2027. Well, Parliament continues with, the budgeting process, and one of the key pillars in the budgeting process is, of course, the taxes through which the government has to collect revenues. So there are a number of taxes that have been proposed. Some have made people happy, others are sad, angry, and they're asking government to actually rethink that particular strategy. Now, this is exactly what we want to get deeper into today, to try and understand the good and the bad of these tax measures that have been proposed to finance the budget next financial year. I have three guests in studio. Let me introduce them. Dr. John Walugembe is an economist, Executive Director, Federation of Small and Medium-Sized Enterprises of Uganda. Good evening, Doctor. It's a pleasure having you on Spectrum. Also in studio, Ms. Phiona Kayondo. She's a tax policy expert. She's also a member of the Tax Justice Alliance. Good evening. Thank you so much for joining us.
Good evening, Ken.
Also in studio, Mr. Aloysious Kittengo is a tax policy analyst working at Siatini, Uganda. Good evening, Mr. Kittengo. Thank you so much for joining us.
Good evening, Kenneth, and good evening, listeners.
All right. I want quickly to begin with you, Dr. John Walugembe. If you can just give us a small overview. We are trying to see whether the tax measures that have been proposed are pro-people or against the people. From your quick analysis, what can you tell us about the tax measures overall, looking at the picture without probably singling out a particular tax?
Okay, so I would say that it's a balanced picture. On one hand, I'll say certain measures were proposed that we believe help people at the bottom of the pyramid. For instance, the raising of the pay-as-you-earn threshold, we believe will help low-income earners, people who earn less than 335,000 Ugandan shillings. At the same time, people who earn more than 10 million shillings would have to part with 40% of their pay. So what we see there is government trying to support those who are earning less. What we also found to be good was the raising of the value-added tax threshold from 150 million to 250 million. The private sector has been very adamant that this should go at least to 500 million, but we think this is a good starting point. Similarly, the raising of the threshold, many of us felt should have probably started at 500,000. But in Luganda, in English, they say a bird in hand is better than two in the bush. Government also introduced certain excise duties on commodities that Ugandans use on a daily basis: sugar, cooking oil, fuel, and these kinds of measures possess a risk of negating the positive things that government has done on the other side that I've earlier raised, but also of hitting the poor the most, because if you look at how much they spend, a higher proportion of their disposable income goes towards food and these kinds of commodities that are needed in everyday life. What we also see is government going very strongly in the construction sector by putting excise duty on cement, on grout, by increasing the transfer stamp duty on transfer of land from 1.5% to 3%. So what you see is that people in the construction industry are going to be hit hard. They'll find it more expensive to buy land. they find it more expensive to construct. And this has implications for the country because we have a housing deficit. So whereas government has allowed low-income earners and has given them some kind of a stimulus on the pay-as-you-earn side, they are instantly going to find that it's more expensive to rent because very few housing units are going to come onto the market as a result of the measures that government is proposing. So we see it's a mix. If you look at, for instance, the penalties under the tax procedures bill, government has, initially when we had this IFRIS fiasco last year, the penalties were about 6 million. They were reduced to double the tax due, and now it has been revised down to 200,000, which we believe is a positive. So it's a mixed kind of story, but what you see is government, on one hand, trying to support low-income earners, but on the other hand, trying to raise revenue to be able to meet some of its obligations. So it's kind of conflicted, and that's why you see policies that seem contradictory. But what we see is government attempting to support people at the bottom of the pyramid.
All right. If you're given an opportunity to probably advise, what would you say they should withdraw or uphold?
Well, what I could do is that these excise duties on commodities like sugar and so on, those I would reduce a bit. If you look at fuel, the risk is now we are having a global crisis which is affecting the supply of fuel. So you want to be careful because you're not even sure of the supply and things of that nature. So I would kind of first hold on and see how that evolves. The rest of the sugar and so on, I would simply reduce. I would still have the excise duty, but maybe not charge 200 more, maybe 100 would be okay. Construction, I would try to not come so strongly. I would maybe say I would increase maybe by 250 shillings on a bag of cement, grout, similarly 250 shillings. Increasing transfer fees, I'm not sure I would raise it. I would double it like they've done. So making small increases, I think, in my opinion, would be okay. But also, at the same time, I would also, because the budget is about what you earn vis-a-vis how you spend. So what I would also do as government is to show an aggressive plan to cut back on expenditure. Because it's one thing to say we shall raise more money, but if you're not being frugal, especially in such an uncertain global economic context, then it may not be very fiscally responsible, in my opinion.
All right. Let's go to Mr. Kittengo. Mr. Kittengo, we want also to hear from you before we dig deeper into the real issues of the taxes. Overall, what would be your assessment of the tax measures?
Thank you very much. I can say that in terms of the overall, the focus still is on the regressive tax measures. Those are the excise duty, the value-added tax, and then you see others which are almost targeting the taxpayers. For instance, if you're talking about issues related to transport, where they are going to at least make sure that you incur some costs, but also even when it comes to generally the VAT, it has what he was talking about, the window of waiving at least the burden from the taxpayers. But when you look at it in one way or the other, the 2026, 2027 tax measures, they are looking at using the regressive tax measures to collect more. And I think when you look at it in one way or the other, it has been more of increasing on the rate than widening the tax base. And the fact that they are not widening the tax base, just looking at increasing the rate, it is more going to increase the burden to the taxpayers. And those are some of the taxes he was talking about of the excise duty, where you're going to find taxes on sugar, taxes on cement, taxes on cooking oil, taxes on fuel, taxes on cooking fats and others. So you when you look at it generally, on the side of income of pay as you earn, you see that there is a relief, okay. But for us, depending on the analysis which we did, the relief is going to be taken, because what you are relieving someone from 235 to 335, like around 100, is going to be taken by the indirect taxes. The indirect taxes in terms of sugar, indirect taxes in terms of fuel, indirect taxes in terms of cement, indirect taxes in terms of cooking oil. So you find that even though there is a relief, but it is like a carrot and stick in one way or the other. So generally, it is a good thing, because it has been on our demand that the government should look at the cost of living of Ugandans, so that it can expand the threshold from 235 to at least 500. Because when you look at the survey which was done by the housing survey report, it indicates that a Ugandan can spend around 500 to 600. So if you are looking at achieving even the savings among Ugandans by increasing from 20 US dollars billion to 40 as per the tenfold program, it means that none of those people who are below that will be in position to save. They're just going to be increasingly being indebted because of the cost of living. So for that one, it is okay. But also, even we saw that the government is looking at how they can tax the entertainers, because it has been there to withhold, but the problem was on who can withhold on behalf of the government. And now it may be the people who are organizing them, they will be in position to withhold on behalf of them. But we are also looking at how can they track, because you might find that me and you, I can come to you, Anderson, and say, Anderson, can you be my MC? And I pay you in cash, or even using mobile money. Government will not be in position to track that. So we need to go beyond looking at a source of revenue and look at how can we comprehensively make sure that Uganda is moving slowly, but also adapting the digital system of the fintech, of using money in terms of the moving away from the cash economy to the cashless economy. So if we can move in that direction, it will help us in one way or the other to tackle some of the challenges we find in taxing the potential taxpayers who are running away from paying taxes, because you don't know how they are doing business, and most of the business we have in Uganda, they are generally informal. It is me and you who are doing transaction. All right,
let's go to Phiona. Phiona, very quickly, let's hear your take. Let's get the gender perspective. When you look at these taxes, what made you happy? What makes you sad?
Thank you, Kenneth. What made me happy is the pay as you earn, which was at least increased from the 225 to the 335. We look at this is the threshold where most of the women fall, and this is where this is what is paid to them, and this is what they earn in most cases, according to their levels in a gender perspective. I will not compare a woman who works in URA to a woman who works as a cleaner in a certain organization. So the fact that that person is not so much taxed is a plus, because the standard of living will improve in the family. And we have seen in Uganda mostly these days women are the breadwinners in most families, especially the grassroots families. Yeah.
All right. And now, very quickly, we need to dig deeper now and look at these issues. And I want to begin with you, Dr. Walugembe, very quickly. And I've been following you in other spaces where you've been talking about issues to do with digital tax.
Yes.
Digital taxation, and brings in the issues of mobile money and a number of issues. Why should we be concerned about those particular issues? And if you can tell us exactly what is happening in that area in terms of taxes.
Part of the concerns we have with our budget that all of us have agreed upon is that government is not widening the tax base fast enough. Instead, it's deepening. Focusing on, you go to cement, maybe you are charging 500 excise duty, increase to 1,000. You go to sugar, you increase. So we are saying that what else can government do to ensure that more tax is paid? And there's something that's very easy. We are into a digital economy. The government, through NDP4 Vision 2040, has indicated that the digital economy will be key in terms of increasing productivity, efficiency, and job creation. Now, most Ugandans are unbanked. Most Ugandans use mobile phones to transact. Now, here is a situation where government charges 15% excise duty on service fees. So when I transact, whatever fees the telecom charges, government takes 15% of that. But in addition, it comes to the money I've transacted, my money, which has already been taxed. You know, I earned 10 million, I already paid 4 million, and so on. Now, on that balance, as I transact on mobile money, every time I withdraw, government takes 0.5%. And we are saying no. Please stay with the 15% on the service charges. This is making the cost of withdrawing using mobile money prohibitive. And what's interesting is that these charges don't apply when I'm withdrawing using my ATM. They also don't apply when I'm using agency banking. So what is government's policy objective here? Is it to drive, using taxation, Ugandans into traditional banking? It's not a problem, but that is not government's role. Government should be a fair umpire. It should allow we, the consumers, to choose based on the service that is provided. So we are saying, please don't discourage mobile money usage through these kinds of taxes that don't make sense. Most of these governments have decided not to charge withdrawals, and most countries do not charge withdrawals. They charge a percentage extra duty on the service charges. Now, the other thing related to digital is the cost of a smartphone. A good smartphone in Uganda costs 300,000, 350, 400,000. As a result, most Ugandans are locked out of the digital economy. We have close to 33.2 legacy phones. We only have 20 million smartphones. That includes the 4 phones maybe that Kenneth owns, the 5 phones that I own, the 6 phones that she owns. So the smartphones are concentrated in the hands of a few. And what is the problem? Government charges 10% import duty on every smartphone. It charges 18% VAT on every gadget. We are asking government, in line with the EAC recommendation that smartphones should attract 0% import duty, please remove that 10% import duty, remove the VAT. How are you going to make the money? The more, number one, the more people transact using mobile money, the more the other 15% that you collect will increase. So you'll end up going back home with more money. If people abandon mobile money, the 15% will mean nothing. Similarly, if people are not online, they are not using the phone, more people use phones, government will make more money through other taxes. You know, because as I'm using the phone, I consume more, I'm more efficient, my business becomes profitable. As a result, I pay more taxes to government. Even the telecom companies pay more taxes to government. And we are saying for smartphones, you just start with what we call entry-level smartphones, phones that cost below 350,000 shillings. In this way, we make it easier for every Ugandan to have a smartphone. Even all these government services like IFRIS that seem to bring more people into the tax net will be successful. But now IFRIS is here in Kampala, Mbarara, most of these districts, they have never heard of this thing. So how is government intending exactly to widen the tax base if some of these solutions are not receiving the desired uptake? So as a federation, this year we have prioritized the digital economy in terms of our tax proposals because we believe it's critical. The future is digital and government needs to get serious. Government has committed itself, by the way, in Vision 2040 that they want to bring down the cost of a smartphone to 60,000 shillings. And we're advising them, you can't get there through a miracle. Start by improving the policy environment. And what better to do it than amending tax policy to push us in that direction.
All right. Mr. Aloysious Kittengo, let's hear your thoughts, quick thoughts on the issues that have been raised by Dr. Walugembe on the digital economy and the issues of mobile money and smartphone. From where you sit, how do you look at that issue? Is it an area of concern from the side of taxes based on your analysis?
Thank you. I can say that from what we have done as Siatini, we were able to do what we call a day in the life of a taxpayer, and looking at how much does someone pay when you are using a smartphone, when you are importing it from outside, because we don't have. The plan was that Uganda do assemble the smartphones, but now we don't have an assembling planned for
There's
smart.
two companies that were allowed to do so in Namamvi. Maybe you have not followed. Are you saying they are not producing mobile phones?
We can look into that, but the issue is that what you were saying is right in terms of the expense to purchase a smartphone. And for us, we were looking at how much does someone pay for a smartphone. He was looking at issues of import duty, the value-added tax, the withholding tax, the infrastructure levy, among others. And it is a challenge if you're looking at Uganda participating effectively and embracing the increasingly digitalized and digitalized economy. The fact that now we're in the digital economy and we want to see people doing business and getting services using the digital services that are provided in different platforms. So if you are looking at Uganda having smartphones that are cheaper, the issue is removing these taxes helping us to achieve what we want to achieve, or we need to look at how can we assemble those funds within Uganda so that we can check on the issues of dumping, first of all. But when it comes to the digital economy, I think Uganda as a country, we are taxing the digital services in Uganda. First of all, we have the digital service tax, which is looking at the income. We have the value-added tax, which is supposed to be collected by someone who is supplying a service in Uganda, and we have other related charges like the digital, like the internet data is part of it. So when you look at all those taxes which we have in an era of digital economy, we have to ask ourselves: are we preparing to usher ourselves in the digital economy? Are we making our citizens be able to be competitive? Are we making the environment suitable or attractive to anyone who is willing to come into the country? And where is the problem? Because currently, as a country, we need to look at how can we support the digital economy to be in the country. Is supporting the infrastructure, because you have to look at the issue of accessibility, issues of availability, and issues of affordability. So beyond the smartphone being there, the other aspect of the infrastructure which is supposed to support the entire value chain is supposed to be also looked into. Because when you look at how many of us, the internet data, it stands at 12% per each unit you are consuming, per each money you are spending. Each penny, if you're saying that you're going to spend 500, you're going to pay 12%. So is that enabling any Ugandan to benefit in the internet, in the digital economy? So to me, I think while we are trying to say that Uganda is trying to embrace what they call financial inclusion, first of all, but also even looking at digitalizing the economy, we need to look at the enabling environment. Is the environment we are operating in, is the environment we are in as Ugandans favorable, enabling us to benefit, but also even be able to embrace technology and the digital economy in Uganda? So to me, I think we have to look at a wider range of issues in terms of, first of all, the affordability, which is what he's talking about in terms of the smartphones, but also even beyond that. Right. If you look at the aspect of money transfer and the money you're using in terms of accessing these items, if you're saying internet, how much are you paying? In terms of even withdrawals, how much are you incurring? Are we embracing financial inclusion, or we are making some people to be out of the system? So to me, I think there are a number of issues which we have to look at. First of all, for the financial inclusion. Secondly, for embracing the digital economy, because currently, globally, the country is looking at, worldwide, countries are looking at how can we increasingly tax cross-border services in terms of digital and globalized economy.
All right, let's take a break now. When we return, we'll go to Phiona to dig deeper on the taxes around sugar, taxes around fuel, and how they are likely to impact on the local citizen, including mobile money, where some women, most of the businesses run mobile money. You find that it's mainly women who are involved. Keep your comments coming via the WhatsApp line 0703-090-090. Spectrum continues after this break. Well, thank you so much for staying with us on Spectrum, live on Radio 1 FM 90. We are talking matters taxes to do with the next financial year budget, 2026-2027. And in studio, Dr. John Walugembe, economist and executive director, Federation of Small and Medium-Sized Enterprises of Uganda. We also have Mr. Aloysious Kittengo, he's a tax policy analyst with Siatini, Uganda, and Ms. Phiona Kayondo. She is a tax specialist, but also member of the Tax Justice Alliance. Now, Phiona, we've looked at the issue of digital taxes. It involves issues to do with mobile money, mobile phones like you've had there. I don't know if you have something to say, but also we'll be interested to understand the likely impact on the excise duty on fuel and also sugar and even the issues of to do with the construction materials. Let's hear from you.
Thank you very much, Kenneth. When you look at the digital economy, most of the participants in the digital economy are women and youth. And if taxes on withdrawals are increased, then that means it will affect that side of Ugandans. So for me, I think there is no need to increase the withdrawal charges, because there are very many sources where government can extract taxes, especially in the digital economy. Like you've heard, Aloysious has told us about the levies, the import duty, the infrastructure levy, the 18% VAT on a mobile phone. For me, I would think that would be enough tax to make sure that the digital economy is operational. When I look at the issue of fuel is, let me say, it is the driver of everything that we do in an economy. When you look at the transport depends on fuel. The farmer deep down in the village will depend on the fuel. So if there is a hype in the fuel by the 200 Uganda shillings, to me, I see there will be a press in the standards of living. Right now, we have a global aspect that is taking place in about USA and Iran, and you see that because of that problem, everybody has looked at the fuel as the target. You find that even right now, as we talk, fuel has increased. Previously, fuel was around 5,000, but now most fuel stations, fuel is at 5,200, 5,500. So to me, I would think that the 200 would be so much. Yes, we shall not refuse that government has to look for taxes for revenue. At least I think government should hold until there is stability in those areas where we get fuel from. And also, I see 200 shillings is a bit big. Here we look at it as a 200 shilling, which looks small, but to a taxpayer and that supplier of any commodity, it is indeed big. We see that if there is an increase in the fuel, many things, many common essentials that we use at home will be affected. You'll see that if fuel increases, sugar will increase, posho will increase, everything. So you find that basically the standard of living of a Ugandan will be so high. It will be difficult for a person to survive. When you look at the sugar, I would say there is an increment on sugar of 500 shillings that is being proposed. To me, yes, we may look at it at the healthy perspective, because according to statistics, we see that most of the annual deaths in Uganda are brought about by non-communicable diseases, which are due to things like sugar. But again, if you look at a common man deep in the village, sugar is unessential to them because there are no substitutes. Substitutes used to be there previously, but if according to the climate changes, you see that such substitutes are no longer there. For example, I'll give you an example. My grandmother in the village, when you to go and visit them and you ask, what should I bring for you, the first thing they will tell you is sugar, because even the current price that is on a market is higher for them. They cannot afford. So I would think if they are to increase, at least let it be at most 50 shillings annually, so that even the last person in the village, even that last person at the grassroots is catered for.
All right. Mr. Kittengo, let's build on the submission she has made. The issue of fuel, sugar, and all those kind of taxes that are being proposed. And maybe I should put this question to you. When we see the government continuing to raise, taxes, increase the taxes in those particular areas each financial year, does this mean we do not have other areas where we can get the revenue? Because, like she said, in some places these are essentials, things that people cannot do without.
Thank you, sir. Anderson, in our first discussion, I was indicating that the challenge we have is that the government of Uganda is looking at regressive taxes as an entry. Those are the indirect taxes, that the VAT and the excise duty. And when you look at them, they are more like playing with the figures. They are not looking at the different other sources of revenue, even within the indirect or the direct taxes. So you find that government is just now playing with the figures. Can we increase? Because when you look at the fuel, according to the plan, the domestic revenue mobilization strategy, within the plan, it indicates that the government plan to increase at least 200 shillings after 2 years. So it means that if we were saved from the other COVID impact, now the government is looking at enforcing it or putting it into play this financial year of increasing the fuel. But as my colleague was trying to as she was able to explain some of the issues, the current state of play is not good enough for us. I know we need revenue to finance our own development, but when you look at the current state of play, the fact that we don't have a regulation on fuel, like countries like Kenya and Rwanda that have gone ahead to regulate fuel in terms of the pump price, it is going to be a bit challenging, because it was after the news that government is going to increase fuel and people had to escalate. The companies that are dealing in fuel had to increase the fuel, and we don't know if it was as a result of the uncertainty outside where we are getting fuel, or because we don't have a regulation in place in Uganda to counter those
to set the market price.
Yes. So you find that we need we now propose, when we were meeting the parliament, we were saying that as it is with electricity, we have a challenge with the prices of electricity, but we have at least price regulation when it comes to electricity. Can we even also do so that the Petroleum Authority Uganda be given the mandate to do so? Because if it is not there, the final consumer is going to cry in the private sector-led economy, because for them they are looking at prices, and the uncertainty within the market is giving them the opportunity to do so.
Keep in mind that the fuel that we are now using in Uganda is brought actually by a government entity, funded by taxpayers' money. That is unique.
Yes, so that's why we are saying, that's the reason as why we are saying that we need a regulation first of all to ensure that the final consumer is not exploited. Why? Because when you look at what fuel does for us, is massive and huge. And I was giving you, I remember when we were sitting here, I was giving you the example. Just look at what people are footing. People are sitting on boda 3 or 4 to go back home, because it is expensive to sit on one person on the border. Even now, people are running away from taxis to go to the buses. Just come here at Mapela. You people lining, waiting for the bus because it is cheaper. So beyond even the transport costs, but even the cost implication on the final consumer, because if someone is using fuel to purchase raw materials, the end user of that particular commodity is going to pay the indirect taxes heavily at the end of the consumer. So to me, when it comes to sugar, when it comes to fuel, we have to look into it. I buy the proposal of at least increasing, not like 200 when it comes to sugar. Why? It is an health aspect, but we are looking at it, what does sugar do? Beyond the factory sugar, which is exempted, which is exempted, but the sugar which we are using on day-to-day basis, how many Ugandans are in bakery? And they are using sugar. And you are also going to increase taxes on cooking oil. That means that the profits that are going to be got from those products is going to be minimal because of the increase in prices of cooking oil, the increase in prices of sugar, among even the increase in prices of fuel. So you're going to make products in Uganda of some people not competitive enough, and they are going to move out the market from the market.
All right, Dr. Walugembe, very quickly before we hear from the listener, your quick thoughts on the issue of taxing fuel, sugar. Aloysious there suggests that we can even have a price limit. Is it something that you think can work in Uganda?
Well,
Set a price limit?
The challenge with that is that controlling prices can becomes a slippery ground that you might find difficult to move away from. Of course, government is in a tough scenario. Whatever you touch, people say don't touch here, don't touch there, don't touch there. So,
well, people are not complaining about taxing alcohol. I've not heard anyone complaining about that. People are happy. It's one of the proposals there.
Yeah. So, but okay, yeah. But now, what we are saying is that, because government likes indirect tax measures because of the informality of our society. So it's easy money to collect, like fuel. You pay it unknowingly as you drive, as you do this, sugar as you take, cooking oil and so on. So it's easy tax to collect, but I would agree with my colleagues that we must be careful with these taxes because they hit the poor the most. Because these rich people, it's not necessarily the fact that they take more sugar. So actually you don't collect more tax from them. You find that the tax that you collect on such commodities are coming from the people at the bottom of the pyramid. So it has a certain aspect that hits the poorest the most. So that's my caution. And that's why I would say that it would be best that government increases taxes on these items in a gradual kind of manner, sparingly, having thought through it carefully. When I look at, and what's funny is that there are two major tax exemptions in this in the proposals. One is the tax exemption for Bujagali, which is supposed to get extend tax exemption up to 2030, and then there is up to 2032, and then there is a tax exemption for people who invest more than $10 million in tourism facilities. So you see that these proposals are very good for very rich people. See? Yeah, very rich people are getting a good deal. If I have more than $10 million and I'm setting up a resort, this is superb. In this proposal,
you increase, the amount of money that comes into the country through tourism.
Yeah, but again, we shouldn't focus on trickle down economics. That let's allow the rich to get richer. They will share their wealth with the poor. That kind of economy doesn't work and has proven not to work. So I would say that government is in a catch-22. As I said, I already acknowledge the fact that government, they've also increased salaries for arts teachers, or they are proposed to increase salaries for arts teachers. So they've made some poor proposals, but they have also made sure that the rich have a field day.
All right.
Yeah.
All
so
right.
Yeah.
What would be the way forward now, Mr. Kittengo? Let's begin with you. Way forward when you look at this, because this might not be a one-off. Even the following financial year, we'll still be looking at new taxes and what. Are there any specific areas in the economy or any particular, advice that you would give to maybe widen the tax base so that we're not having this kind of discussion about sugar, fuel in the near future? What would you advise the government?
I don't know if we can have an anticipation that if we can get more revenue from oil, then the taxes that are taxed indirectly will reduce. I don't think so. But I'm looking at the aspect of how we can organize our mining sector. I think if we can organize it well and make sure that we remove all the illicit activities that are taking place there, supporting the sector to be able to produce and add value at certain level, or maybe at a given level, which they call mineral beneficiation. I think it is one of the sector that can help us to at least get some money. And also checking on making sure, because I don't want to say that tax exemptions are bad generally, but how can we make sure that there is value for money? If you're saying that at least you use 70% of Ugandans should be employed by you, who is going to benefit from that exemption. 70% should be raw materials from Uganda. Can you make sure that those criteria are met, so that if you are employing Ugandans as it is being stated, that at least those 70 should be on the wage bill, that we are able to get pay as you earn? We are able to have the backward and forward linkage on the raw materials. So if you don't have raw materials, why are you putting that provision within there? Because it is going to be subject to abuse. Why? Because you have not prepared your sectors well. So to me, I think there are some loopholes which we can close now in terms of reducing on the nugatory expenditure. We failed when we were looking at fiscal consolidation in terms of increasing revenue mobilization, reducing on nugatory expenditure, and reducing on borrowing. We are borrowing massively, and because we have failed to close or tighten the bolt when it comes to the revenue foregone in terms of, first of all, the expenditure, first of all, the nugatory expenditures, and in terms of the tax expenditures that are not giving us what we want, that value for money, but also even looking at issues of how can we make sure that we can close the loopholes related to smuggling within the EAC region, because we have various differences when it comes to how the systems are operating within the EAC region, and it is making other countries not to benefit at all, facilitating investment, but also even making people do business within the country. So to me, I think we need to look at other areas where we can widen not only the tax base, but also our income as a country.
All right, we have comments coming in from the listener. I'm going to read out some of those comments, and please do prepare to respond to some of them. And I want to begin with this. Good evening, Spectrum. Thanks for the show. My comments about the topic at hand. Whereas taxation is the only way government can get revenue, when it comes to aggressive and unfriendly, it becomes a bad regime. All tax levies must target inclusivity, making it cheaper for everyone to pay. Call it tax widening as opposed to tax deepening, like what it is now in Uganda. Most of the proposals are affecting both the formal and informal sector. That's say increasing building materials, stifling the real estate sector, whilst the informal is limiting consumption. That's a tax on sugar, among others, which has already been increased even before the budget is implemented. Increment of tax on fuel has a ripple effects, since it's a key driver of economic growth. Now there is shortage, the prices are at the roof. What about revenue from our own oil? The government should be sensitive for its people by reducing all the proposed taxes across board to encourage affordability and financial inclusion for mobile money operators. That's Kamugo Fred Keta, listening in from Chira Municipality. Anderson, thanks for the show. I'm extremely disappointed with the government. They seem not to be bothered about the ordinary Uganda. They want is to achieve their target, forgetting they are suffocating people who cannot afford to feed themselves. But the worst part of all is that people don't get value for the taxes they are paying. Abima Jimmy, listening in from Mukono. Impact of the 0.5% alternative minimum tax, AMT. How will the proposed 0.5 tax on gross income for companies with persistent carried forward losses over 7 years affect struggling businesses, startups of capital-intensive industries? Then we have a comment from Simon, who is in Chira. He said, digital tax software reclassification as imported software is no longer allowed as an input tax credit. How will this increase the cost of digital transformation for local companies? We have another comment here. 30% levy on second-hand clothing. How will the 30% environmental levy on worn clothing affect the livelihoods of informal traders and the accessibility of affordable clothing? Still Simon from Chira. Then stricter stamp duty compliance. The proposal to move stamp duty on land transfers from 1.5% to 3% is significant. We reduce formal land registration, leading to more informal land dealings. Then we have another comment, vehicle import restrictions. What will be the economic impact on the import market of reducing the allowable age of imported vehicles from 15 to 13? All those comments there are from Simon Peter. And then we have another comment here, the government of Uganda has struggled to effectively broaden the national tax base, resulting in disappropriate burden on low-income earners. This is largely because such groups are easier to access tax, especially through mechanisms like withholding tax agents. As a result, many small and medium-sized enterprises face significant financial pressure due to high tax obligations, which in some cases contributes to business decline and closure. Question to the guests in studio: why has the Ugandan government struggled to widen the tax base despite ongoing reforms? That's Okello Gabriel listening in from Yumbe. Well, those are some of the comments that we are getting. Very quickly, if we can respond in one minute.
Okay,
Dr.
first of all, I don't think government appreciates or has a clear strategy on expanding the tax base. I've seen the domestic revenue mobilization strategy. I've seen the private sector strategy, the MSME strategy. They say one thing, government does another. I'll give you an example. The current trade order operations are chaotic. They are ill-planned. They have no objective. If you want to expand the tax base, why would you go for the very people that you want to target to pay you tax with an unclear objective? Because you're saying you want to create trade order. Fine. Why do you break their structures? See? So if you're talking about growing the private sector, expanding the tax base, and then you criminalize enterprise by the people you say you want to target in your tax expansion measures, then I don't think you're in my opinion, I don't use a very organized. So therefore I would say that we need to have a rethink. You know, how do we expand the tax base? How do we treat our MSME sector? How do we attract people in the informal sector to come into the formal? Let's not punish them. Let's not confiscate their assets. Let's not break down their houses that they have invested and borrowed to construct because of a trade order that's not well grounded in law. So this, for me, exemplifies the lack of a clear strategy in terms of expansion of the tax base.
All right, very quickly in 1 minute, Mr. Kittengo, your closing remarks.
I think we have a challenge. First of all, we need to understand, and our government has failed to provide the necessary information, especially for and to me, when it comes to formalization, this is the debate we have been having between us and Uganda Revenue Authority and KCCA. You are not expecting a small, medium enterprise, which is below 150 million, to be compliant with corporate income tax. They're supposed to pay presumptive tax. And they're supposed to pay only two taxes, which is not a tax the other. The first one is trading license, the other one is a presumptive tax. So if they're paying, then it means that I like the arrangement that now if you're paying a trading license, pay as presumptive tax if you are in that threshold. Right. So that means it is not informal. And it is formal. It is formal. So if you're saying it is informal, then you don't have the understanding. You understand. So to me, I think we just need to provide the necessary information to our taxpayers to understand. The last one, someone was talking about software, which is removed from being claiming for input VAT. That means that you will not be claiming for input VAT. You're supposed to pay the taxes you're supposed to pay. And to me, okay, we need software within the country, but also we need to tax the digital economy in one way or the other.
All right. Very quickly, Phiona, in a few seconds, your closing remarks.
My closing remarks would be, I would look at the government is looking at taxing the formal economy, but to me I see Uganda is more of an informal economy. And if we have seen that the biggest percentage is informal, then the government should lay a strategy on how to collect taxes on that informal economy.
All right. With that, we come to the end of Spectrum. Thank you very much, dear guests. And thank you very much, dear listener, for tuning in and contributing to this discussion. Tomorrow, same time, another topic will be on air. But up next, we have the news in English with Miss Kenneth Lillian. Thereafter, we'll have the Soul Train with BP Junior.